we go. Okay, so where'd that go now? There it is. Everybody hear me okay? Throw in the chat if you can hear me, if you have issues hearing me. I have a few more minutes here before we get rolling. But this is the first time home buyers class, so this is a good step to saving some money in the future, avoiding some costly mistakes. Thanks for joining up. Let me know whereabouts Saskatoon everybody's from. If you throw it in a chat there, I can see, and we'll talk about that. And how did you find out about this? Nice, by Dundurn, nice. Sutherland. Thanks for showing up, everybody. Again, if you guys are just showing up, throw it in the chat there. Let me know whereabouts you guys are from, what part of Saskatoon you're from, or if you're in the surrounding area. We got a few more minutes here before we get going, but we got some more people coming in still. Blackstrap. Good camping out there. Nice, thanks for showing up. Hopefully I'll give you guys some really good information throughout this whole process. Save some money when you go to buy your first house. We got some more people showing up again. For all the people that haven't heard yet, throw whereabouts in Saskatoon you guys are from, or if you're in surrounding areas, let me know where you're from. Let me know how you found out about this. It's a lot of Facebook, a lot of Facebook. Yeah, that's good. That's a good first step though. I'm gonna give you some quality information here because this is a big step. It's a huge one. So we are right at 7 o'clock here. There's about 18 of us in here for now. That looks pretty good. So as I get going here, just feel free to put in the chat if you have any questions. I will try to answer them as I go through. There's quite a bit to get through with this, so I might be going a little fast through this, but don't worry, I will be able to answer questions either through this or at the very end of Q&A that we have at the end. So if it's a little tailored, kind of personal to you when we're talking about mortgages and things like that, don't worry, we'll be able to answer those calls and those questions and things like that. We can book a call with me. It'll be a one-on-one. It's free. It's no obligation, but it just gives you a little bit more. So we're not tailored to every single question on here. But if it's a general question, I will do my best to answer it, and either during the process or at the very end of the Q&A. So it is 7 o'clock. There's 21 of us in here, so we're going to get started. So this is the first time home buyers class. So I'm going to show you how we can save some money and some really good knowledge along the way, just by avoiding these 6 costly mistakes. Now, these aren't all the mistakes that everybody makes, but these are the ones we found that are pretty common. So first off, before we really get into this, does this really resonate with anybody right now when it comes to buying your first house? You know, are you concerned? Is it stressful, intimidated, anxious, and uncertain? Let me know in the chat if anybody's feeling any of that, because my goal here by the end of this is to eliminate all of that and make this a stress-free process as we get rolling. So let me know how you guys are feeling about this. So I know I sure was when I bought my first house. I had no idea what was going on. It just felt like it was so fast. Yeah. I mean, it is a big purchase. It's huge. It's possibly one of the biggest purchases you're going to have in your life. So that's what I'm here for. I'll say this a lot, is that I'm going to be working for you to make it as smooth as possible. I have your back 100% of the time through this process. I have the backing of some wonderful people to help us out with this as well. So don't worry, I'm going to make this as seamless as possible. And yeah, clueless, that's a good one. Yeah, I was 100% clueless when I was first bought my first house. It was kind of a mess, so don't worry. Okay, so start off a little bit. Yeah, stressed. Yeah, I was definitely stressed as well. Yeah, it is definitely stressful. So let's make this let's ease some stress here. Just a little bit about me. There's a couple of reviews of me. The first one was when I first started out in real estate. It was my first home sale, but I did help them find a place after that. They were an older couple, but just by saying my future was bright there really made it worthwhile jumping over. And the bottom one was, again, I helped her mom, who was an older lady, get out of her place and into a better place, and she was thrilled with it. That one was kind of a mess. It took us a while to get her out of there. There was a lot of failed deals there that fell through from other buyers and things like that, but I ended up working through it, and I was constantly in touch with them. I let them know everything that was going on at every single time, and all the stresses they had. I made sure to work through that, and we made it as smooth as possible as we could. So again, a little bit about me. I am Andy Goddard. I am a realtor. I started my real estate career back in 2021. I started with Royal LePage Hallmark. I wanted a new career. I love helping people. And so this is one of the main reasons why I started. It's just by simply helping people. I switched to eXp in January of 2021 because I met some amazing people and felt that was going to be a great step to one of the fastest growing brokerages around there. And it's now expanding worldwide. It's just great to be a part of that. I've helped many buyers and sellers as I've been through this for the last year or two. And I service Saskatoon and surrounding areas, mostly a lot of Saskatchewan, but mostly the Saskatoon and surrounding areas. I live in Warman with my wife, my son, who is 3 years old, and a daughter who is 5 months old, and my 2 crazy dogs. So if you hear some weird noises during this presentation, it may be just the little one running upstairs. He gets a little crazy every now and then. So just be wary of that. I am going to throw this in the chat here. It is a link to everything that is about me, all my social medias, whether it's business or personal, just so you know exactly who it is you are seeing talking to you. And as a person, I am fully transparent. I don't have anything to hide, and I like to meet new people. So friend me if you want, follow me if you want, but that's just who I am, so you know exactly who it is. And so like I said before, I'm going through a lot of stuff here, so I'm going to post this in here right now. If you want any information after this or during this, go ahead. This is my book a call link. You can book a call with me. It is one-on-one with me. We can discuss anything you need with this or anything else real estate related. So it's no obligation. It's simply just a phone call so you can get all your questions answered. So we're going to go a little bit through the process here of what it takes to buy a house. So this is just a really quick rundown. I can go hours over this, but I won't because we don't have that much time. So the first step to home ownership, well, number one is coming to this class. You're going to find out a lot of information about buying your first home. So this is a great first step, and thank you all for that. So what I always talk to buyers about when I first meet them is I ask them, are you approved? Do you have mortgage approval? Because that is a huge thing. I will get into why it is, but it is a major first step when it comes to buying a home. Now, does anybody know the difference between pre-approval and actual mortgage approval? It's pretty much right there in the name, but just does anybody know what the difference is? The main difference. Okay, so basically pre-approval is they're going to take three things. They're going to take credit, your down payment, and your income, and they're going to give you roughly what you'd be able to spend up to for a mortgage. Actual mortgage approval is just that. They're going to take all that, look into the big details of that, and they're going to tell you exactly how much you're able to approve. So that's just a little difference. Pre-approval is just a starting point, and then actual approval after that. So we want those things before we get started. And so let's just jump ahead a little bit and say you have your mortgage approval, you are ready to go. What the next step is you meet back with me and we sit down, and what I do is I find exactly what it is you want, what it is you need in a home, and we get all that sorted out. So I'm going to need to know, what kind of a place do you want? Do you need a house? Do you need a townhouse? Do you need a condo? Is it just you? Do you have a family that you need a big yard for? Do you need a garage because you love a bunch of cars, right? Things like that. I even look a little bit into the future, right? So if it's just you or just you and your spouse, let's say, I'm going to see, maybe you only need a smaller house right now, but, eventually you may want kids or pets and things like that. So we're going to make sure we kind of look a little bit ahead in the future so we get you into something that you can grow into. So this is, hi, Robin. Yeah. And that's exactly right. Yeah. And we're going to get into that. So everybody, that is Robin. I was going to mention her just before we get started, but Robin Kraft, she is a fantastic mortgage broker. I am teamed up with her with this. So anything that comes to financing through mortgage approval and things like that, that is who we are going to go to. So that being said, I am a licensed realtor. I am not a licensed mortgage broker, but that's what she's for. So I can answer some financial questions, but if you have any, throw them in the chat. Robin be able to answer some of those, or again, book a call with me. The booking call is right there. We'll get all the questions you need and we'll send you over to Robin and she will answer much more for you for that. So that's just some things. So again, getting back to this, we will, I'll find exactly what kind of home you want. And then what I do is I go with the MLS and I will find what is all available and what it is you're looking for. I will send you those. And if you like them, we will go look at them. What I also do for clients is I look off market. So I'll look at for sale by owners. And if they're selling it privately, I'll see if it's a perfect fit for you. I'll let you know about that. And I'll talk to the owner and I'll see if, he's willing to work with us on that and see if we can get you in that if it's a perfect fit. Same thing when it comes to rental properties. If there's a landlord that has a property for rent, they're trying to get a renter for it, but it is a perfect fit for you, I will call them up and just see if they're willing to sell it to us instead. So that's the kind of things I offer for you. Again, I work for you. I work with you and whatever it is you need, and to make smart investments. So let's just say your money is now my money. I want to invest it in something that's worthwhile and perfect for you, right? Again, I have your back 100% of the time. So let's say we find a house, you love it, it's perfect. So we are going to want to put an offer into it. So that's fine. And so that's where I come in again. I will negotiate on your behalf and we will settle on a price that everybody's happy with and we agree to. And then we go into what's called a condition period. So it's roughly about 2 weeks. And what we do there is we put in different conditions, right? So a home inspection is, quite a common one, but you can throw a bunch of things in there. And again, I can go through that at the end of this because I could go forever on this type of stuff, but it just gives us more time to make sure the house that you are going to purchase is perfect and it's in good working condition and things like that. And you are happy and you are satisfied with it. And it also gives us time to get the financing finalized. So like I said, you have mortgage approval. We're just going to make sure it's finalized now and ready to go. When the conditions are satisfied, you are happy with it, and the financing is good to go, we lift conditions and the house is sold. So now we just wait for possession date. Possession date can be very dependent on the circumstance. So let's say a family already lives in that house. Well, we just have to wait a little bit longer for them to get out. But if it's a vacant property, we can easily get you in faster. So that's just things like that to look for. So once we get to possession date, we meet back with the lawyer, everything is signed off, financing is finalized, things like that. The lawyer releases the keys to the seller's agent. I meet up with the seller's agent, I get the keys, and then I meet you at your first home that you have purchased, and it is a happy day. So that is kind of the home buying process in a really, really condensed thing. Now, like I said, we can go hours on this, but again, if you want, book a call with me. We can go over this in more detail, or at the end there, we can do this in the Q&A section and go over a little bit more details of that, but that's just the basics. So I'm going to start getting into the mistakes that I talked about that's going to save us some money. So the first three mistakes kind of focus on the financing thing. So like I said earlier, I'm not a licensed mortgage broker, I'm a licensed realtor, but I can just give you some facts about the financing part of things. And again, if you have any questions, throw them in the chat. We'll try to answer them as we get going. And other than that, let's get into this. So mistake number one is ignoring a first-time home buyer incentive programs. Now let me know in the chat if anybody's actually ever heard of this program before or looked into it. No, that's fair. Not a lot of people have, which is fine. Oh, Amanda, you heard of it. Okay. So we're just going to go into a little bit of detail of it, but some have heard of it, some haven't heard of it. Yeah, there is also one of an RSP. Yeah. Autumn, yeah, that's a good one. If it's worth it, absolutely. Yeah. So I will touch base on whether or not it is worth it or not, right? And let you know. And again, after I go through this, if you still aren't sure if it's worth it or not, again, book a call with us. We'll get you in touch with Robin and she'll explain, you know, all the concerns about that. Yes, absolutely. That is correct, Autumn. Yeah, you do have to pay back a portion of, or you do have to pay back their down payment they gave you based on the new value of the home, but I will get into that as we go. So I'll explain a little bit of this right here. So this number was from 2019. It was they helped homeowners make home ownership more affordable. They used about 1.25 billion to help them out. Again, that number could be different because this was from 2019. So what is a first-time home buyer incentives? How does it work? It is a shared equity mortgage. The government of Canada has a shared investment in the home and shares in both the upside and the downside of its property value. It's not interest bearing, no regular payments, and is repayable at any time without a prepayment penalty. So you don't have to make payments on it. There's no interest that accumulates on it, and there's no payment penalties. So that's kind of nice for that. So they will, what they do is for resale homes, they will give you an additional 5% for a down payment. New builds, they give anywhere from 5 to 10% down payments, but I strictly focus on resale for now because it's just the more common thing. So if you want to know more about the new build stuff, we can get into that a little bit later. So who is eligible for this? So basically any Canadian citizens, permanent residents, and non-permanent residents who are legally authorized to work in Canada can apply for this. So if it's just you, perfect. If it's you and a spouse or you and somebody else want to go in on this mortgage, you, at least one of you have never bought property before. So as long as one of you haven't bought property before, you can be eligible for the first time home buyer incentive. Now, if you are going in with somebody or yourself, you cannot make yourself or combined $120,000 a year or more, because the government of Canada believes that if you make $120,000 a year on your own or combined, you make enough money that you can buy a home on your own. The combined insured mortgage and incentive amount cannot exceed 4 times the total qualified annual income. So you can't get 4 times what it is your combined income is. And the maximum down payment, including the incentive amount, cannot exceed 19.9%, because this program will not help you avoid CMHC insurance premium. So basically what they're saying is if you put a down payment on a house and it is less than 20% down, there are insurance premiums for your mortgage. They want mortgage insurance on that. If you pay over 20% of a down payment, you don't have to pay mortgage insurance. However, this isn't going to help you get past those. So I'll get into that a little bit right away here. Now, I did see somebody mention the RRSPs. RRSPs. Yes. So this is a separate program, but it also classifies as a first-time home buyer incentives. You are able to use RRSPs for a down payment up to $35,000 per person. So let's say if you and your spouse want to use this RRSP program, you can go up to $70,000. They are not exclusive. You can have both of these. You can apply to have both this one and use your RRSPs. Both of them define first-time home buyer in the same way. Now, a little bit different with the RRSP program is you can pay this back in chunks, but you have to start paying it back within the first 2 years of you using this as a down payment. And the RRSPs have to have been in your account for 90 days or more. If you put it in, 2 months prior to this, they won't let you use it. So it's just some things like that to look out for, is that there is some stipulations with that. And so how does this incentive work for paying off? Like we mentioned before, so you have to pay off this incentive when the home sells. So if you decide to sell it within the first 5 to 10 years of owning it, you have to pay it back then. You can pay it back anytime in the first 25 years by either way of a lump sum or refinance your mortgage. So they want it in one chunk. They don't want payments. That's what makes it different from that RRSP plan, is that they don't want payments. They want a lump sum. Or you can pay it off right at the end of your term. So if you decide to live in your house for 25 years, awesome. But at the end of your mortgage, they want that paid back again. So a payoff example, as was mentioned just now, was they want it based off the new value of the house. So what does that mean? So let's just say for a number, $400,000 is the purchase price of the home. I like using $400,000 because it's an easy number and easy math. They're going to give you 5% of a down payment as well, which is $20,000. So now let's say you want to pay it off in 5 years and the value of your house rose to $500,000. Well, now that investment they put into you is now worth $25,000 instead of $20,000. So when you go to pay it off, you have to pay off what that percentage is based on the value of your home. Now, does that make sense? The higher the value of their home, the more you're going to have to pay them back because the government of Canada is investing in you. They want to see their investment grow just like you want to see your investments grow, right? So that's kind of where you got to watch for something like that, is that you may have to pay more back when you go to pay it off. Now, the flip side to that, you have to watch as well, is that let's say in 5 to 10 years, your house is now valued below that and it's at $300,000, let's say. So that 5% technically now is valued at $15,000. Well, as you know, the government's in to make money. The government is not in to lose money. So if that happens, they're not going to expect $15,000 back. They want their initial investment back. So they gave you $20,000. Your house falls below that $400,000 mark. They're going to want their $20,000 back. They're not going to lose money on that. So again, it's just things like that to watch out for when it comes to paying this off. Now, here's just another example, and I'm going to tell you why. A lot of people might be asking, well, why is this, why is it worth it then if you're going to pay back more than what we invested in? And this is kind of why this makes it a little bit worth it, right, to help you out in the long run. So let's say Bonnie buyer wants to buy a new home. The purchase price of a new home is $400,000. Again, let's use $400,000. You have to put a minimum 5% of a down payment down. Now, that is a thing that you have to have. You have to have a minimum of 5% of a down payment. That's just how it is. So we'll get into that a little bit later. But so you put 5% down for down payment of $20,000. Now you have to borrow $380,000 for a mortgage. And so now let's say the government of Canada is going to be like, well, we're going to help you out a little bit. We're going to give you another $20,000. So you're going to have $40,000 for a down payment. So what that does is now instead, you only have to borrow $360,000, which now makes your monthly payments cheaper. That's part of what they're doing to help you out, is that now initially starting out to buy your first house, they're going to just help you with a bit of a lower payment to start. So that's kind of where it helps a little bit. Now, remember I mentioned back a little bit ago about these insurance premiums. So when you put your 5% down, that is the bare minimum to put down when it comes to buying a home. So your mortgage insurance premiums are going to be at an all-time high because it's the bare minimum. Now, if you put 10% down on that home, those insurance premiums drop. And again, if you put 15,000 or 15% down, up to 20% down, they just drop further and further until over 20%. We don't have any insurance premiums. So this is another way they're helping you, is that if you put 5% down, they match your 5%, you have a 10% down payment. Now your what you take for a loan to pay off a monthly is cheaper, and your mortgage insurance premiums are now cheaper as well. So this is how it helps you. It just helps you pay a little less at the start. Again, you do have to pay this off, but at least it helps you at the start to get things rolling some more to get your first house. Does that make sense to anybody? And did I lose anybody with all those numbers? Let me know, because I can clarify some more on it, but that's just the basics of this first time home buyers program and why it's beneficial to some people. Just a little less payments a month, and your insurance premiums are dropped a little bit. And again, if it's a little confusing and you want a little bit more on that, again, I'll put it in the chat here again. You can book a call with me. We will go over some more of it, and we'll get you in touch with Robin as well, and she will explain a lot more of it and the pros and cons of this program, but that's just kind of it in a nutshell, just so you have an idea that this is out there to help you out. So we'll move on to mistake number 2. Now, it's not getting a pre-approval. And I remember back when I said the first thing I talked to buyers about is getting a pre-approval. Well, that is a big thing, because we can't really shop with confidence or shop at all without having pre-approval. It's just, you know, you can go and look at houses all you want, but you don't know what you're going to be able to afford and to buy. So I already asked what the difference between pre-approval and mortgage approval is. So this is the 3 things they look for when it comes to mortgage approval. They want to know what your credit's like. So obviously you're going to want to have good credit. I believe, Robin will probably correct me if I'm wrong here, but 620 is about the bare minimum when it comes to looking at that. They want about 620 for a mortgage or for a good credit. Perfect. Yeah, so 620, but 650 and above is kind of what they're looking for good credit. So they want to look at that. And then they're going to want to look at income. They want to look at 2 years worth of past tax returns to see what your income is, to make sure you have a steady flow of income. If you have a salary, that's even better, because they can see what it is you make in a year and they can work with that. Now, hourly wage is not salary because it fluctuates too much, right? If you only work a 6-hour day compared to a 10-hour day, or you took a day off here, or you added shifts, right? It just fluctuates too much where they can't really see exactly what it is you're going to make in a year. So they're going to have to look. That's why they need the 2 years worth of tax returns. Again, salary is the best, but not everybody is on a salary. And then the third thing they're going to look for, as I mentioned earlier, is they're going to want a down payment. So you have to have a down payment saved up. However, there's a few different ways to go about the down payment. The first way is, yes, you can have it saved up, and they're going to want that 5% on the purchase price of the home saved up. You can use that RSP program if you qualify for it. Or the third thing is you can ask for it as a gift from a family member. Now, it has to be a gift. You cannot say, I am borrowing it from my mom or my dad, because they're going to take that and use it against you, because it's now another form of debt. You're borrowing money and you have to pay them back. That is debt against you, right? So that's the big thing. It has to be a gift. But those are kind of the 3 ways you can have a down payment. And again, if you want to know more about it, you can definitely call us and we'll answer more of those questions. So then once they get those 3 things, then what Robin or whoever it is you use, I'll see if that's even better too. Thank you for that on them. Yes, that's also a thing too. So again, things like that. So again, they're going to review your income. So what they're going to do is look at those 2 years and look to see if they got steady income. What are you doing now, right? To make sure you have steady income. And then they're going to look at your credit. Like we said, 620 to 650 is good. And anything above that is fantastic. So they're going to look if you have credit cards, or if they're maxed out, or if you have debtors calling or creditors calling, things like that. They want to look what your credit history is. And they're going to take that into account. Then they're going to review what your down payment source is. So they want to see where it's come from and things like that. Make sure it's the right amount. So when they get through all that, and it's perfect, then boom, we have a mortgage approval. And so the nice thing about that is it is reliable. So now we know how much we can go house shopping with. I'll get to that in just 1 second there on. Yeah. We can now know how much it is to shop with. We know the maximum amount that we can go up to look for a house. And the nice thing is it holds its rate for 90 to about 120 days, roughly in there. So as rates fluctuate, you are locked in for 90 to 120 days. So if you find a house within that time frame, perfect, that's what your rate's going to be. Now, if it takes us a little bit longer, maybe it takes us over 3 to 4 months to find a house, then we just have to go back and get pre-approved again, but it could fluctuate a little bit. You might be a little bit off because the rates change, but it's nice that for 3 to 4 months that you are locked into that nice rate. So that's why it's so good to have these pre-approvals, that it holds the rates and we can shop with confidence. And so again, that gift part on, so with that is you're just asking a family member, like it has to be an immediate family member. So mom, dad, brother, sister, right, grandparents, you can ask them for a gift and they will give you the down payment is basically what that is. When you go to get a mortgage or approval and to see, they're going to look at where that down payment is coming from. And if you say that you are borrowing money from my mom and dad to put as a down payment, they're going to take that as you're borrowing money from somebody, that is more debt, right? They're going to think you are taking a loan from somebody, so you have to pay that back. That goes against your debt, right? So that's why it has to be a gift, right? So you can always ask, and it does happen quite often where people's immediate family will give them money for a down payment to help them out, right? So it's things like that. And I can always discuss this later on with you if you want. Maybe Robin can answer that part of why the difference is if you need to disclose it or if it has to be a gift. But we can get into that in a little later on too, and we'll figure that out. No worries. No, keep asking. That's fine. I'll have all this. So when we have the Q&A at the part, we can continue on with that. But yeah, no, that's a good question. So we'll continue on here for a bit. So again, that's why it's good to have pre-approval. Again, it shops with confidence, and the savings is priceless in a way, because if we go shopping for a house and you find a house that you love and you fall in love with, it fits for your family, then it's just heartbreaking when we find out we can't really afford that house, right? So let's say it's $450,000 and you're only approved for $400,000. It's just very disheartening. It's discouraging. It really takes a little bit to get back into it, where I want this to be smooth. I want this to be fun, right? That's the thing about this, is I want it to be smooth and fun and make it a really, really good experience. So that's why it's so important to have a mortgage approval, right? So I had another questions as we go. I've had these before, is about co-signers. So can a family member co-sign for me too? Yes, they can. Actually, a lot of people can co-sign for you. It doesn't necessarily have to be a family member. The only thing to watch out for is they have to be able to be approved as well. So they have to have good credit and income. So if you come in and you want to get mortgage approval and you think you want a co-signer with it, or you might need a co-signer with it, that's fine. But just remember, they have to also be able to be approved as well. And there is risk to having a co-signer, right? The co-signers themselves, they're putting risk out there that if you're not paying your bills, that they're going to have to pay them for you. However, having a co-signer will also allow you to still use this first-time homebuyer incentive program. You just have to watch that both of your combined income, again, doesn't go over that $120,000 a year mark. But yes, you can definitely still use the first-time homebuyers incentives with a co-signer. The unfortunate part for the co-signer, though, if you go with doing that, if they've never had the first-time homebuyer incentive program used either, and they've never bought a place before, but they're helping you out, they can no longer use it after that, because it now shows that they have used it and it goes against them and they won't be able to use it in the future. So that's a couple of risks for them, but that's just something to think about if you want to use a co-signer as well. And so how long are they committed for? They're committed for as long as you can't get approved on your own for a mortgage. Now, let's say in a few years, they're a co-signer for you, they're getting you in your house. And let's say you can now afford to qualify on your own, maybe paid off some debt, whatever, get more income from your work, anything like that, then you can go about getting them off and they can be free and clear of it. So what are the extra costs of that? Well, you just got to get them off the title. And there's some paperwork with that. So administration fees, lawyer fees, things like that. So it's going to be a few $100 here and there just to get them off, but they will be free and clear and you'll be on your own and have your own title on your place. So that's kind of the pre-approval stuff in a nutshell. Again, Robin's on here, which is fantastic. So she can answer some questions about that. But if anybody has any more detailed questions on that, definitely, again, book a call with us. We'll definitely answer whatever it is you need. I put the book a call in the chat there again, and we can go over a lot more, or we can go over through some stuff at the very end with some Q&A. So this comes to mistake number 3 with financing, is using your bank. Now, there is nothing wrong with using your bank at all. Everybody has a bank. It's where your check-ins and savings accounts are, your RSPs are possibly at. And it's what we've been ingrained to know, that when we go into, needing a loan for something, we go into our bank, right? So there's nothing wrong with it, but I just want to show you why it's something to watch out for. So there's a couple scenarios here. So the lady on the left, she had her own business and she was running her own business. That was her main source of income. So when COVID hit, it really took a hit on her business to the point she had to shut it down. The other thing is she had a basement tenant because her house had a suite in the basement. She rented it out, so she was getting rental income as well. But they decided when the lockdowns hit that they were going to move out and go move in with family. So now she lost that rental income. She also used a room upstairs for Airbnb. Same thing. When COVID hit and the lockdowns hit, nobody was traveling anywhere, so their Airbnb took a big hit. So just in a short amount of time, she lost her business income, her rental income, and her Airbnb income. So she felt she had no reason and nothing else left to do but to sell her house. So she knew what the realtor fees were. She knew how much it was going to cost to sell her house. But what she didn't know is that she was going to have a $30,000 pre-payout penalty. She didn't know that, and that's just a huge blow when you've already lost your main source of income and all your other incomes. Okay, so that is something to watch out for. If you go into your bank, it's fine, but just make sure you know what the payout penalties are. The family on the right, same kind of thing. When the earthquakes in Haiti hit quite a few years ago, this family had they had stuff to do with sorry, I kind of lost the word there. They had a nonprofit organization in Haiti. And so they had a bunch of involvements with that. And so when the earthquakes hit, they decided that they were going to help run an orphanage down there because they were offered to. So like, you know what, let's sell our house. Let's take the proceeds from our house. Let's go help the orphanage run down there. And we're going to use the proceeds from our house to fund a year or two living down there and, help out. What they didn't know is same thing. They were going to be hit with a $17,000 payout penalty. So again, when you're trying to use the funds from your house sale to fund whatever it is you need, and you don't know there's a big hit at the end, that is very devastating. So those are things to watch out for. Now, I'm not saying that everybody or every bank has these massive payout penalties, but it's just things to know when you go into them. So how does this benefit you? So like I said, I'm teamed up, as you see, with Robin. She is fantastic. And what we do for you to add value to all this is that, again, we work for you. We watch your back 100% of the time. And what we do, Robin is fantastic. She can go around and shop around for good rates and payout penalties. And we can, try to get you little to zero payout penalties. We can't guarantee zero payout penalties as much as we'd love to. We can, but we're going to at least work on getting those really, really small so that if you ever need to sell your house before your mortgage is up, which is very common, that we're not going to be hit with massive payout penalties. Now, there's lots of reasons why you'd want to pay out your mortgage early. People move, people want to upgrade, right? You want to move out of country, you got a new job, things like that. There's a ton of reasons why. So we want to make sure whatever it is of a lifestyle change you have is going to be smooth and an easy process if you ever need to get out of it, and you're not going to be hit with a massive fee. So again, that's kind of going to a bank. Again, nothing wrong with going to your own bank, but just things like that you should watch out for. So if anybody is thinking they want to know where they are, how far into their mortgage approval process they can be, again, book a call with us. It's in the chat there. We will get you on the phone with Robin and she will explain a lot more of that. But that's kind of the financial mistakes here that we see a lot of people make. So again, if anybody has any questions on the financial side of things, please throw in the chat. I'll do my best to answer them, or Robin when she's answering them, or we can cover them at the end of the Q&A session. So now we're going to get into where I come in as a realtor. So there's another 3 mistakes when it comes to the real estate side of things. Now, so the first one, it's gonna be quite quick with this one, but I just want you to know some things to watch out for. So mistake number 4 is buying directly from a builder. Oh yeah, paying off in lump sums. Yeah, we will get down to that in the Q&A as well. We'll talk about how you can pay it off and doing things like that. And there's actually a lot to that. So again, if you want as well, book a call. We can definitely go over all that stuff too. And then we'll cover that at the end. So again, buying directly from a builder. There's nothing wrong with buying from a builder at all and going yourself. There's nothing wrong with it, but I just want to put it out there on why. There's some things to look out for, right? So let's say you see a builder's building a nice show home over here and it's open, you can go check it out. By all means, go and check it out. But the only thing to watch for is that builders sometimes, they don't have they don't have your benefit. How to word that, sorry. They don't have the best intent, they don't watch your back as much as I do, right? They're there to sell their product and they're not going to show you anything else, right? This is just our product. We're here to sell you it. So what I do is if, you want to go there and check it out, by all means, check it out, have any questions you want, but just explain to them, hey, I'm working with a realtor. I just got some questions. And then you come back to me and say, hey, this is what I found there. And we can go over, is it good or bad and things like that. But the nice thing is I will go with you. We'll go check out a builder. And then I can show you, this may be a good fit for you and your family. Absolutely. However, these guys are building stuff over here with this builder, or this builder over here is building some nice stuff. Let's go check that out while we're at it and make sure those are good fits for you, or all the resale houses that we can go check out as well. I at least give you the options and show you what's all out there that would be a good fit for you, instead of the builders who kind of are just there to sell their own product, which isn't a bad thing because they are in sales, kind of like I am. I'm in sales as well, right? They're trying to sell their product. Again, nothing wrong with it. That's just what they do. The other thing I can tell you from knowledge is the good and the bad builders. I am not going to name any names on here because this is recorded and I don't want that bad phone call by the end of this that I was bashing somebody's company. However, I can at least give you the ones to, this is good, this one's good, things like that. Same thing is with upgrades. So what builders do is they like to throw in upgrades on their homes, right? So maybe the basements aren't developed yet, but they're going to offer a basement upgrade package. Maybe the garage isn't done, but they're going to offer you a garage package, things like that. And so what I can do when you bring me with you is I can, say, hey, yeah, that upgrade, it would be worth it. That upgrade would be worth it. That won't be worth it. You know what? Maybe there's a chance you could do that one cheaper, either by a contractor, or maybe you can do it yourself for cheaper. But that's the nice thing about us realtors is we are so well connected with a ton of contractors, from anywhere from electricians to plumbers to roofers to finish carpenters, like anything you can think of, we have connections for that, and we can give you really good deals, and we can tell you who are the good ones to use. So that is another benefit of using us to go look at a builder. Now, some people also ask, why, is it any difference if I buy directly from a builder or use a realtor to go buy it? And the answer is really no. But what you're missing out on is all the knowledge of other builders and other properties, right? That's what we bring to the table for you. The builders put the cost of our realtor fees in the purchase price because they know that a lot of their product is going to be sold by us realtors. So they already build that in the price. So you're really not getting any different of a deal if you go through them or through us. So why not bring us with you? And why not have that knowledge in your back pocket to make sure your investment is sound and it's going to something that's going to work for you perfectly, right? Again, like I said many times, I work for you. I don't work against you. I'm here for you. I have your back. I want your money to go to something that you're going to love and enjoy, and it was a perfect fit for you. Okay. So if anybody has any questions on builders, throw it in there, and that'll probably put it at the end of the chat just to keep things rolling a little bit more here. But the next thing this is something that I like to talk about a lot because it really hits home with me, because I have some good examples of this one, is a home inspection. Why it's not good to skip a home inspection. Now, the thing is, you do not have to have a home inspection, right? It is not a mandatory thing. It is completely optional. But as a realtor and myself, I strongly suggest not skipping a home inspection. And I'll explain why. So I will give you an example of my house. So I bought my house in, like I said, 2016 in Warman. The house was built in 2012, so it was only 4 years old, but I still had a home inspection. So the guy came in, we went over everything, and trust me, it's everything. It is a huge detailed book on everything about your house. That's what makes it so worthwhile, is that it's such a mass amount of knowledge. So things were good. It's just minor stuff. They'll tell you everything about if your furnace, your hot water heater, your air conditioner, if they're working properly, if all your appliances are working properly. They're going to tell you, if there's little things to fix here and there, like minor things, just to keep your house maintained, right? So they're going to show you absolutely everything. You're going to check your plumbing. There's nothing these guys miss. Like, it is insane the amount of stuff they can show you, right? So again, back to the example with mine. On my ensuite bathroom shower in my master bedroom on the top floor, we noticed a leak, and it was going down into the main floor bathroom, into the ceiling there. And it was very minor. My house inspector said it's nothing to worry about, but there is a leak going. And if I leave it for, however long, it's going to cost me a ton of money in damage. And you know what it took just to fix that? Was just a little bit of caulking. That cost nothing. The tube, I think, cost like $6. But the little bit of caulking we used was nothing, and it fixed it, and we've been home free, right? But if I never got that house inspection, I would never have seen that, and the damage of that would have been unbelievable. So it's things like that they can see. So when we look at houses, as a realtor, we're trying to look kind of a lot of things in the house, like mostly everything we can see, we try to take a look at, but we can't see through walls. We can't see through roofs, right? But these guys with their technology can see inside walls. They can look for mold. They can look for if there's insulation missing somewhere, things you can fix, right? Like, it's not always a scary thing of, oh, everything's wrong with this house, right? It's just telling you, what to watch for when you maintain it. As well, my house that I bought in Medicine Hat, Alberta in 2015, it was built in the 70s. And so the bathrooms didn't have those vents to get rid of all the steam from the showers and such. Anyway, it was fine. There wasn't anything major about that. But what happened is he just said, I recommend putting the vents in. Well, we're in Saskatchewan, it's minus 30. The only thing they have in the bathroom for ventilation is a window in the shower. So you can tell that, in the middle of winter, when you're having a shower and you want that steam to go out, it gets a little cold in there, right? But it's not scary. It's just to tell you that, hey, you should probably put this in later on to prevent some moisture getting into everywhere, things like that. So it's just things like that. And I will get to the cost. That is a great question, because I was going to ask that right away. But that's just what it happens when you skip a home inspections. You kind of miss those things. Now, we're not saying that every house is going to be so much stuff to fix here and there. No, that's just going to tell you the basic maintenance. Same as you buy a car, right? If you buy a car, they're going to tell you exactly, what you should watch for to maintain it. Well, this is really no different, right? The nice thing about this is that let's say they go in there and they find out that the furnace is broken, or it's going to be broken soon because it's on its way out. Well, a furnace costs quite a bit of money to replace. So the nice thing about this is, because the home inspection is built into the conditions, which is a big thing, is that if you are not satisfied with the home inspection, let's say it's just completely wrecked, there's the foundation screwed and there's just things you don't want to deal with. Like, maybe you have to replace all the appliances, or all the, mechanical stuff is going. You can just say, you know what, I don't like this. You don't sign off on it. You are not satisfied. We back out of the deal, and there's no extra cost. There's no cost of that. You don't lose any money, and we just go look at the next place. It is like a get out of jail free of a bad home. Not, like I said, not saying all these homes are like that, but just in case you ever run into that. So again, back to the furnace thing. Let's say he says in a week that this furnace is going to cave out. I'm not saying that they can see if it's going to cave out in a week, but just so you know, that we can put that into the negotiations again. So, okay, we'll go back to the other agent and say, look, we found out that the furnace is about ready to go. We would like, can you guys, are you guys going to be able to fix that before we move in? Because we want that covered. And, or else we can say, you know what, the furnace is about to go. It's going to cost X amount of dollars to replace. We want that off the purchase price because we know we're going to have to fix it when we move in. So that's kind of a nice thing like that. We can either negotiate a better price, we can negotiate to be fixed before it goes, or if it's just too much stuff to fix, we back out of the deal and we go find another place. So that's the nice thing about that. Now, as Amber asked, does anybody know what the cost of an average home inspection is in Saskatoon? Even if anybody just guesses, There's no right or wrong answers, but I'll just let you know what the average one is. But let's have a guess, see what you think it costs. 2,000 is pretty high, but if you're paying 2,000 for a home inspection, holy man, that would better be the best home inspection ever. But no, so it's not quite that high. But yeah, Ryan, Autumn, you guys are pretty close. So you're anywhere from $400 to $500 for it. Now that does sound like a bit of money when it comes to buying a house, because you're already spending a bunch of money, right? But $400 to $500 for this book of knowledge is not bad at all. It is a small investment into one of the biggest investments you guys make in your life, possibly, right? So let's say your house is worth $400,000 and you don't get a home inspection, and you got to go in there and you got to fix a ton of stuff, and it's going to cost you a whole lot to fix it up. Or maybe the foundation is just completely going away and you're going to be out, right? A $400 to $500 investment into one of the biggest investments in your life is just something you should definitely not skip. Again, you don't have to. It is, again, mandatory, but it is my job and is required of me to explain to you a home inspection and why the risks of skipping it. You do not, again, want to skip these. Some people just simply do not want to do them, and that's fine. Again, I'm working for you. I have your back. I want to make sure your first big investment is worth it and it's not going to fall apart on you and your family when you move in. So that's just one big thing why not to skip a home inspection. Anybody have any more questions on home inspections? Yeah, and that's also true, Robin. Yes, an appraisal requested by a lender is definitely different than a home inspection. We can get into that on a side call as well. But if you inspect 3 homes, then yeah, that's a little different. But we're hoping that we don't have to go through 3 homes worth of home inspections, right? My goal is we're going to find you the perfect one off the start. We're going to spend it one time. It's going to come out absolutely fantastic, and we're not going to worry about spending it again, right? That's the main goal. We're not hoping to have to do 3 different home inspection, because that would just be pretty awful if we've run into 3 homes that it's just not not good. So we're definitely going to avoid that. Any other questions on home inspections? Okay, well, we are going to get into the final mistake that some people run into, and this is kind of more tailored towards condos. So if we go to look at a condo, there's something called a condo review document. Now, has anybody ever seen these or know what's entailed in these condo reviews? They're sometimes called a Schedule C. They're sometimes called an estoppel package. So has anybody ever heard of these or know what's entailed in them? So a condo review document, the estoppel package or a Schedule C, is basically the entire information on the condo building. The entire building itself is all the details of it is going to be in this book. Now, another disclaimer here, I am not qualified to tell you the exact stuff that's inside it, like whether or not it's good or not. That is up to the lawyers to decide, right? So what happens is when we go to make a deal on a condo, this comes to us no different than a home inspection. It is built into the conditions. So that way, if you don't like what you read in there, we're out and we'll go find the next one. Again, same thing, doesn't cost you anything to back out of the deal, we're out. But this is another one of those nice conditions. So again, what happens is when we agree on a price, I'm going to get the document. What I do is I send it to you and say, you should definitely read over this. But I was highly recommend you send it over to your lawyer, because he or she will tell you what the best process is to do with it, whether or not it's worth it or not. But I can at least tell you what is inside and what it is to look for. So one of the things that's inside it, it's called a reserve fund. So that's going to be how much the condo corporation has in reserve for if maintenance comes up, right? So I'm going to give you an extreme example. Let's say this building has 20 units in it. It costs $100,000 to replace the roof up there because it is done. It needs to be replaced badly. They need $100,000 to fix it. Now they don't have any money in the reserve fund, so they're going to come to every condo owner in that building and say, we need $5,000 from you, each and every one of you, so we can pay for this $100,000 roof. Again, that's an extreme example. Not saying that's going to happen anywhere, but that's just an extreme example, and it's things to look out for. So what the lawyer is going to do is look at that reserve fund, and they're going to tell you whether or not there's enough in there, if it's been used recently, or how, if it's worth it, or if there's things that need to be fixed in the future, that they have enough money to fix that, right? Without coming to you, the condo owner, for extra money. So that's something they'll look out for and what they look for. So this thing will also tell you what has been fixed previously in the building and what needs to be fixed in the building. And I have an example of that. It's going to tell you the common area reserve, like the common area fund. So for lawn mowing and snow removal, things like that, it's going to go over all of that, let you know that there's funds in for that. So basically the condo board itself, the condo corporation is in charge of the actual condo building, right? And all the common areas. So the lobby, if there's a lobby, there's a, so for like the hallways and the elevators and things like that, they're in charge for, but you as an owner is in charge of the inside of the condo unit itself, right? So all your appliances and things like that. I will get to that government incentive plan at the end of for this Q&A. I will get to that. So again, this will cover other things like if there's any bylaws for your unit specifically, right? So it may tell you what you can and can't do for renovations. It'll tell you if pets are allowed, if they are allowed, it'll ask you tell you what kind of pets are allowed. It'll tell you about parking spaces and what your parking space is, how many you have, if they're underground, if there's underground parking or not, if they're electrified stalls, right? It tells you absolutely everything there is to know about this condo. It'll tell you what condo fees are and if condo fees are going to be rising, and if it is, how much is it going to go up by, and things like that. It'll have numbers and phone numbers for everybody from the maintenance managers and the owners and things like that. It's going to have a ton of information. Like this thing is thick of information. So that's why it's highly recommended to take to the lawyer so they can see all of that stuff. But I'll give you an example of why this is really good to have and how it's super beneficial for you. So a client of mine, we went and looked for a condo for him in Saskatoon, and we loved the one that we looked at for him. He thought it was the best fit for him because he was a single guy, but he thought this was perfect. So as we're looking at the condo, again, like I said, I look for everything in there with you, working for you, making sure your process is the best. We noticed that the balcony outside was kind of in rough shape. So the wood where you stand and walk around on, that was starting to rot away. And the iron for the balcony was starting to come loose and rotting away. And it was in really rough shape. So again, we went to the condo review or the document review, and we noticed that, hey, we know about this balcony in here, and over the next 2 years, we are going to start with the worst balconies all the way down to the best one, but we're going to replace all of them. And so they're all fixed, and the reserve fund had enough in the fund to cover that. So there was no extra cost to the owner. So it's perfect. They're going to fix the balconies. We know about it, and it's not going to cost me anything extra. Okay, well, he was good with that. So the thing with this condo building itself, it was an apartment building at the time, but they converted it to individual condos. So what happened was all the owners that bought these things decided they're going to renovate and rip out all the old carpet and put in nice laminate to really make it nice and modern, which there was nothing wrong with that. But what they found out afterwards was that by removing the carpet, the people on the lower levels noticed it was a lot louder for people walking above them because they lose that cushion of carpet. So they brought bylaws into this saying, okay, if you're going to renovate and you're going to rip out flooring, it has to be carpet from here on out. You cannot put laminate or hardwood or anything like that in the main living area. It has to be carpet. And my client does not like carpet. His plan was to go in there and rip out whatever carpet was existing from the bedrooms and put laminate in as well. But now he found out we can't even do that, right? So he had that knowledge. I explained to him that you can't do that because it goes against the bylaws. However, because it was grandfathered in beforehand, the flooring in there is okay for now, and he was fine with that. We took a look at the flooring. We made a judgment call saying, you know what, we think this flooring looks in really good shape. It's not going to be going anywhere anytime soon. So he was okay with it, and he just said he'd deal with it, as the time came if he ever had to replace it. But now he has the knowledge that he can't actually replace the carpet in those bedrooms. So it's things like that to watch for, right? So that will cost you a little bit in the long run, if you don't know these things and you start ripping things out of your, ripping things apart in your condo without looking at the bylaws and the review. Again, not all condo corporations have the same set of bylaws and all that. Every condo units are different. They have their own set of bylaws, or if they have any. They might say you can do whatever you want to renovate your unit. It doesn't matter. Have fun. Some will have some bylaws and things like that, but that's why it's very important to review this. Again, highly, highly, highly recommended you take it to your lawyer. Some lawyers will charge an extra fee to look at it, but some might not if you're already working with them with this process, right? And again, at the end of this Q&A process, we can go over some extra fees it entails with buying a house, and lawyer fees are going to be one of them because you need a lawyer to transfer all the documents, but we can go over that in a later process. But that's kind of the condo review in a nutshell. It's just, it has so much knowledgeable information on the unit itself, so you're not caught into something you don't know what you can't do and you possibly get fined or something for that, right? Or do costly renovations and realize you weren't allowed to do that in the first place, right? So it's just things that it will save you in the long run. So does anybody have any questions on these condo reviews, these Schedule Cs? Again, it acts like a home inspection in the sense that if you don't like what you see in there, or maybe your lawyer mentions that there's not a lot of money in the reserve fund, I don't know, you can say, you know what, I don't want to take the risk, and we back out of the deal and we go find you something that will be worth it for you. Again, I work for you. I help you out through every step of the process. Basically, hold your hand the whole way to make sure that you are satisfied and happy. That's kind of it. So does anybody have any questions about the condo review? Good question. It depends on the townhouse. Some townhouses don't actually have a condo corporation attached to it. Some of them are actually freestanding on their own. It all depends. So that's something I also watch out for too. When we look at listings, it shows on there if it has condo fees and whatnot. So then we know, and then we'd have to look at that. But that's a really good question. Yeah. Yes, if anything is attached as a condo or it says condo fees on it, it will have this condo document, and we definitely want to look at that to make sure you are protected. That's just another kind of like a home inspection. Now that was a lot to kind of, I was talking quite fast here in some parts just to get a lot of things through, because there is a lot, and a lot of that can be definitely elaborated on some more. So I'll put it in here one more time. Book a call with me, and we will go over some more things and finer details, or else at the end of the Q&A here, we can go over some more stuff. But as we keep going here just a little bit now, after all that went through, so we went through a lot of the financing part of things. We went through a lot of the do's and don'ts of looking for a house with home inspections and going to builders and the condo review and things like that. So now that you got all this information, now how do you feel? So my goal was to make sure these are a little less, intense. If you are feeling some still, that's fine. And definitely book a call with me, and we can definitely go one-on-one, and I can really explain a lot more detail into a lot of this. But I hope that this, hour long of me rambling on kind of helped ease some of this a little bit, to know that, what you're getting into, and the fact that besides just me, I also have a fantastic mortgage broker. We're all going to be there for you when it comes to every single step of the way. So let me know in the chat if this helped out, at least in any sort of way for you guys when it comes to buying your first house. Like I said, we're going to have a Q&A at the end here. So if you got a bunch of questions, we're going to go over some stuff here too. Okay, and that's pretty much everything I have just in this general webinar. I covered a lot of stuff, but there is still a lot more that entails to it that I definitely can cover. This is kind of the Q&A spot. I do have about another half an hour left. So throw any questions you have in there about anything, and I'll do my best to answer them. If not, if I can't answer them, or it's, something that's more personal, definitely we'll just get on a one-on-one and we will talk it out at your convenience. Thank you. I will also put in another time here. I will put in my social media stuff, again, you can check me out. You can see what I'm about. I'm transparent as possible. I want you to know exactly who it is you would be working for and with, I should say. You'd be working with me. I'd be working for you because you are technically the boss when it comes to buying a home, right? You're the boss. What you want is what I will definitely help you achieve, right? So that's how it works. You can go ahead, check me out. Make sure you know when things are starting to book up. If there's a spot that you can't get into that you need, I'm going to also put these in here as well. So that's my email, and that's also my phone number. So you can reach me either of those. Text me if you need, just because of people, I'm going to be on calls with some people. So text me if you need a certain time that's not available when you book, and I will definitely work around it to try and fit you in there somewhere to make it work for everybody, or email me, right? You're absolutely welcome. So lump sum payments, I see you're asking about that again. You're talking, let me get this correct. You're talking about when you pay off your mortgage, if you do it in lump sums. Is that correct? Okay, so again, I'm not qualified for financial advice, but that Robin is. So if Robin's still on here, she might be able to answer you in that. If not, again, book a call and we'll even go through more of that stuff, or text me and I can get you in touch with Robin as well to answer that question as well. My number's back up there a little bit, but I will post all that again. Yeah, and that was exactly that one too. Yes. So I know I went through a lot of stuff when it comes to getting a mortgage approval. That was kind of the bare stuff to look at, but there's a lot of factors that also go into it. So absolutely book a call with us. Like I said, Robin is absolutely fantastic. So even if you don't know how close you are to it, or you are close, definitely book a call with her and us. And we will let you know at least one thing. We'll let you know how you're making out and how close you are to it, what needs to be done still. And we'll even give you guidance on how to get there faster, right? So that, you know, we want this to be as smooth as possible and have the most knowledge as possible. Again, thanks everybody for coming on. We still have lots of time. So any questions, even on anything about the buying process, like I went through that one a while back. I'll even go back to it a little bit. This one here, when it comes to house hunting, if you have any questions about the house hunting process, or even the fees that kind of come with it, please let me know. But I do want to say one thing that I should have mentioned at the start. When you work with a realtor for buying a house, this is the beautiful thing, is that you do not pay realtor fees. So basically you're getting me and my services. You don't have to pay me for it, right? The seller, when you go to sell real estate, and the sellers, they are in charge of paying the realtor fee. So buyers do not have to. So that's the beauty of working with a realtor like myself, is that we don't charge you anything to buy a house. That's the nice thing. We are simply here to help this be as awesome as possible. Now I want to revert a little bit back to when I got into real estate myself. I had a lot of problems when I was buying my first home. It was not a good experience at all. It was actually quite awful. So that's what I'm bringing to this as well as my business as a realtor, is I don't want to make those mistakes that those guys did, because it just wasn't fun. But I love buying houses. I love looking at houses. So it still didn't deter me from being, into real estate, because I still loved it, even though those experiences were awful. Buying a house wasn't so bad, but I did not have all this information. I just kind of went with a buddy's referral and we kind of just jumped in a house, but it ended up me being the one looking for everything. And it just felt like he was just going through the motions just to sign me off, and off we go. And then when I went to sell it the next year, that was even more of a, that was such a train wreck. I won't even, I can get into that too, but that was awful. Selling a house was awful as well. So that's, again, more stuff I bring into this, is that I took all those mistakes and I make sure I do not repeat those mistakes, because it just did not make me feel good about it. But I still ended up doing it, and now I'm out here in Warman. I love it out here. My wife and family loves it out here. So in the end, it worked out. But yeah, I do all this to help you and make this process better. Again, work for you. You're the boss, but I make it as smooth as possible. Then any more questions about any of the house hunting process, the buying process, the mortgage process, anything, feel free to throw it out there. I'll even elaborate a little bit more on that selling process, just because it was kind of a funny story. When I went to sell my house, the guy that I used to buy it, because I didn't know any better, I just grabbed that guy again. I said, hey, can you sell my house? Because I need to get out of here a year later. And he said he was no longer in real estate because he retired. But he's got a great friend that's gonna, you can use my buddy. He'll help you out. He's really good. So I met with his buddy. And again, he was an older gentleman and he looked like he was about ready for retirement as well. But he used to come from an agriculture background. So he used to sell farmland. So he was so used to just sitting down with the farmers and just having a coffee and a slow process, right? But I need to get out of my house fast and get in here. And he just, and not knowing any different, I just went with them because again, I didn't know. I'll get to this incentive plan. Yes. Yeah, real good question. I'll pause the story. How to apply for that incentive program? That's a really good question. Robin, maybe you're able to answer that, how to actually apply for it. Or if not, if Robin's gone, we can definitely book a call with us and we'll explain how that application process works. And we'll get you looking into that if that's the way you want to go. Again, up there is my number. You can text me if you want as well. I can definitely get you in touch with her. I got a bunch of texts and things like that coming in. So yeah, feel free. And that we'll also go over the pros and cons of that program. As I mentioned earlier, that it helps you with down payments, but they also have to pay off that in the future. And it all is based on the price of your house. So things to watch out for, but things that we're going to make sure you know all the knowledge of and make an informed decision as we go with that. But we'll definitely get you in touch on how to apply for that. So yeah, and so with that selling that house, his guy comes in and he starts taking pictures of my house, but he didn't even tell me that he was going to start taking pictures that day. So we had a bunch of stuff lying around. It was awful, but he took like 5 pictures and that was it. And he put 1 picture up on the MLS. And again, this was in 2015. So we're in the digital age, you want tons of pictures, things like that. So I ended up cleaning the house up, taking all the photos myself off my phone, sending him all the photos. And he ended up, he was kind of a little bit bitter about it, but he ended up putting them all on there. And it was just things like that was a struggle. He wanted to do open houses, but he would only advertise in the newspaper. And even when it came down to doing an open house, he didn't even have the ad in the paper. He said he forgot, and he even forgot to tell me that we weren't even having an open house that day. So me and my wife, we ended up leaving the house all, for however many hours he told us. And we were just waiting around in the city for him to do this open house. And we found out after that we didn't have to leave, but he failed to tell us that we didn't have to leave. So again, massive mistakes like that I make sure I don't repeat for you. So again, I'm with you all the time. That's absolutely right. Yeah, when it comes to mortgage and financing and even house buying, there is so much involved with it that it definitely is personalized to everybody, especially the mortgage side of things. Like, so what I talked about earlier, not all that is 100%. That's the fact and that's it. There's a lot that goes into it. So if you still want to know, or even if you don't think you're there, book a call with us and meet up with us. We will definitely tell you how you were doing it. Maybe you are there and you just didn't realize it, right? Things like that. So we can definitely help you out with that. Again, these calls that you book are 100% free. There's no obligation at all to it. So feel free by all means. It's just more knowledge for you. There's nothing to sign up for. It's just basic knowledge. And that is more valuable than a lot of things these days, just the basic knowledge. So go ahead, book a call. Like I said, I have my number up there. I'll see if I'll post it again. So there it is again. Feel free, reach out to me whenever you need. Any more questions? Again, feel free to throw them out there. We still have a lot of time here. There's still quite a few of us on here. There's about 18 of us on this call still. So by any means, if there's any more questions or just want to talk anything about real estate or mortgage financing or whatever, throw it out there. We have a discussion about it, see what things are like. It definitely is a hot market out there, so that is things to watch for. Like things are moving like crazy. So, you think you see something today, it might be gone by tomorrow. So that is definitely the things to watch out for when it comes to buying a house. It is fast paced right now. But again, that's what I'm here for, is to maneuver that fast paced market and help you out and get you into something that you're going to be happy with. And negotiation process on that and all that kind of things like that. Yeah, absolutely. Thanks for showing up. Hopefully it was a lot knowledgeable for you. And hopefully I answered some questions that I can. Again, keep throwing them out there. Let me know. We have another 20 minutes still if people want to throw things in there. And the nice thing about being part of eXp Realty as well is that you're backed by so many fantastic people. Thanks, Connie. Appreciate it. We're going to talk soon. I'll talk to you tomorrow, actually, at 11 o'clock, I believe. Thanks. Awesome. Talk to you then. Yeah, being with a lot of these eXp agents, things like that, you get a lot of knowledge. There's a lot of things we learn as we go, and it's just amazing. It's a good group of people. So that's a nice thing, is that there's backing for everything, whether it's for me as a realtor itself, whether you have the backing of some fantastic mortgage brokers, like I said, Robin, you just have, there's all this stuff, there's all this knowledge available to everybody for this. Because like I said before, this is a massive purchase. For some people, this is going to be the biggest purchase they ever make in their life. So we want this, again, to be smooth as everything. Thank you again. Appreciate it. Yeah, you have a great night as well. Hopefully I gave you some pretty good knowledge on all this. Yeah, knowledge is one of the biggest things. And yes, so, I wish I had this when I was buying my first house, because at least then I would have had some knowledge of what's going on. There's things thrown at me saying, do this, do this, do this, and agreeing to everything. And off we go. And that was it. Absolutely. You are welcome. Thanks, Stanley. Yeah, absolutely. I like doing these things. Like I said, I love helping people. Helping people is just amazing when we can step on that onto your front porch or right into your first home. That is such a good feeling. Even it doesn't have to be your first home, right? It could be your fifth home you've ever bought. But if I can get you in there and you are absolutely fantastic and is a perfect fit for you, there's no better feeling than that. And that's what I want for everybody that comes to this call. If they're ready to, if they're ready now, if they're ready in the future, if they now know what it takes to be ready to go, I just want you to have all that and make it awesome. And that excited feeling of owning your own home. It is actually a really good feeling that, it's yours, it's your name on it. You do what you want with it. It's great. Absolutely. Yeah. Book that call. Give me a call. We're going to talk. We will go over absolutely everything in detail, whether it's on that call or maybe we just meet up in person sometime, sit down for a coffee. I love meeting people. I love talking with people. So if you even just want to meet with a call, book a call with me, fine, one-on-one. But hey, if you ever want to sit down face to face and have a coffee, I know we're in COVID times and things like that, but whatever, we can make it work. We can go sit down somewhere, have a coffee, have a beer if you want, right? I'm not opposed to anything. I'd love just to sit there and chat, and you can pick my brain. I can pick your brain, see what's going on, right? So absolutely, if you're even close to on the verge, or even if you still want more questions, call me, text me anytime. I'm there. I will we'll definitely work together. I'd love to work with everybody. I would love to make your first home ownership smooth and fun. So that's kind of things I love to do. But yeah, it's such a good feeling when you can get somebody into something that they absolutely love. And that's what I like to do. So that's why I got into this business. Helping people is amazing. So you meet so many amazing people as you go through it. It's crazy. Your phone just is always blowing up. It's nice. It's fun. It's crazy. It's hectic, but everybody's got crazy and hectic lives as well. But it's fun. Yeah. The family loves it. Kids love it. Dad's home every day now compared to my old job where I was living out of a suitcase, right? This is an amazing thing. So There's still about 9 of us on here. We have another 15 or so minutes, but yeah, if anybody has any more questions, by all means, feel free to throw it out there. If not, I hope you guys have a fantastic night. I hope you guys have a fantastic week and crush whatever it is you guys are crushing, right? You know, or even if you just want to talk to somebody or need somebody to talk to, by all means, reach out to me. Again, love meeting people, love talking with people. It's just, it's what I love to do. So awesome. No, I really appreciate that. I will, like I said, I am here to hold everybody's hand in a sense. I want, I don't want any worry, nervousness, that stuff I talked about earlier. I definitely want, I want you to feel as comfortable as you can. Know that I have your back. I am there for you. That's my promise to you, right? So full transparency. If things come up and we're doing a deal and things come up, you're the first one to know, and you're the first one to know what I am doing about it and make it work, right? That's just, that's what I did for my other client. Like I showed in the review there, her mom was trying to get out of that mobile home, and that was fun. Holy, was that fun trying to get her out of that, but we did it. And I talk to her, once a month, every now and then. I just call her to see how she's doing, and she loves it. So again, that's the thing. Like I'll, just because we do a deal together, if we do a deal together, right, that doesn't mean I'm just gonna be, okay, see you later, off we go. No, I love building relationships with people, and I love being in touch with them later on, just see how they're doing, how they are in general. So that's the other thing you get from me as well. So absolutely, thank you. Appreciate you being on the call. Robin will be in touch too. I'm pretty sure I'll be sending you some more people here. You can help out as well, but we'll definitely be in touch and meet up again and talk about this as well. Yeah, she's fantastic. She'll help you out a ton as well. So it's guidance is what we offer, right? Love giving guidance to people, right? It's just, some people just don't know. And if you need, financials are huge. So maybe keep another little tip is my dad himself, he is a general manager of the credit union back in my hometown of Maple Creek, Saskatchewan. And so growing up, I had pretty much a financial advisor hold my hand. So, when you're young and you don't know what to do with your money that you're making, at least I had him there to smack me in the back of the head and say, hey, if you're going to buy some toys like sleds and quads and stupid things like that, at least pay for it in cash, because I'm not loaning you and putting you in debt for toys. I had that nice guidance going on. And any questions I had when it came to loans and mortgages and stuff like that at the time, he was there for me. But he's in Maple Creek now. He's still on I call him almost every day. But now, between him and now Robin, it's amazing the financial support that I have, that I can answer all these questions if I can. Again, I'm not licensed to do that, so I can just say, hey, this is probably what it is, but we are going to make sure you have the correct answer, and that way everybody is good. So those are the things. We have another, looks like 12 minutes still, and there's a few of us on here. But yeah, feel free, if anybody else has any questions, throw them out there. Any comments, anything like that, feel free to throw them out there. And one more time, all the information again here. This is the book a call link right away. My email address, if you ever need to get hold of me through email. My phone number, that is my direct line. Call, text me. Preferred text me, but if you need to call me, absolutely go ahead, call me. And then there's my link tree that has, again, all my social media accounts. It's got my Facebook, Instagram, personal and business ones. It's got my TikToks. You want to look me, besides just doing this stuff, if you want to look at me doing some stupid stuff too, you might find that on TikTok as well. You never know. Some motivational stuff, just whatever makes everybody's day better. But that's all on there. Feel free to check me out, see what I'm all about. I just, fully transparent. Don't want to hide anything from anybody. So I see some appointments booking up. So yeah, if you can get in there, perfect. If not, again, let me know. My number's on there, and we'll try and squeeze you in any chance we can, and we'll go from there. Awesome. Thanks again, Robin. Appreciate you answering the questions as we go through. We will definitely be in touch and see how this goes going forward. So yeah, that was Robin, everybody. She is fantastic for all your mortgage needs. Definitely we'll be getting in touch with her for sure for any of your pre-approvals and mortgage approvals. So see you later, Robin. We'll talk soon. Thank you, Monica. Appreciate it. Thanks for coming out. Hopefully I gave you some good knowledge on all this. Again, same thing. If not, feel free, reach out to me. We can let you know how things are progressing with yourself. And hopefully down the road, we can get you into something really nice. So. And we have about 9 minutes left. There's looks like 1, 2, 3, there's 5 of us left. So yeah, any 5 have anything else you want to add to this, feel free. If not, yeah, like I said, enjoy your evening. It's cold out there, really cold. So hopefully in the next little bit here, this the sun comes out and starts getting us away, because I live in Saskatchewan, but every year it's the same. I get really tired of winter and I just want to get out there. I want to get camping. I want to get out on my deck and enjoy the nice sun. And I'm kind of done with this -30 stuff. Like, it's just tiring, especially if you have a 3-year-old who's locked up inside with you and you can't throw them outside to go have fun. That makes for a very fun day as well. Oh boy, does that make it fun. Nothing like being cooped up with a toddler, I'll tell you that. Well, I think that's pretty much about it, I guess. If nobody else has anything, the last 7 of us that are on here, including myself, if nobody else has any more questions or comments, again, all my stuff is in the chat there, the book a call, my website, my email address, my phone number is all there. If you ever need to get a hold of me, by all means, reach out to me. If not, I guess we will call that a wrap. Thanks again for the rest of you that are sitting here. Thank you very much for coming to this. I hope I helped ease a little bit of the stress of buying a first house. Hopefully I gave you a lot of knowledge. And again, if you need more, reach out to me. But other than that, I hope you guys have a fantastic rest of your night, fantastic rest of your week. And from there, I hope to talk to the rest of you soon. Thank you. Appreciate it. No worries. No, I had fun. It's always fun talking to people. So enjoy. Yeah. Okay, everybody. You guys have a fantastic night, and hopefully talk soon.